Thank you, Vijay, for being with us today. It's a pleasure having you. When we look at the oil markets and Brent and WTI movement this week, fundamentally, we didn't see any new data supporting the prices, except that the investor is relying on the Chinese demand. Are you afraid that we are going to have an over-optimism in relation to the Chinese demand?
Absolutely, it is over optimism because usually oil demand comes majorly from industries in China and not just by tourism. So, yes, tourism is definitely picking up. In fact, at the highest levels that we have seen, we are almost back to pre pandemic levels. But at the same time, that won't really drive demand as much. On the other hand, fundamentally, we have seen the highest stock oil buildup in the US. We actually have seen more than 500,000 barrels of oil build up this week. That is a big number, and a definite slowdown in the economies is seen in almost two-thirds of the world economy. So that is definitely something which is looming on the oil prices, and the optimism therefore has not been that bright as well.
ولكن الملفت أيضا بأنه عندما what is right when we look to the profit margins, they are highest levels for WTI, $42 per barrel. How do you explain that the refineries are at these levels?
Well, refineries are at these levels because we are seeing definitely supply chain glitches, and that is actually going away now. We are seeing that supply chain is going back to normal as China opens up not just the people from COVID, but the fact that the COVID over there is actually seen 70% less harmful than it was in the in January 2023, 22. So we actually have seen that in spite of all of these issues, the supply chain is getting better and better, and hence the cost of things will go down. Given that said, we will actually see inflation numbers also coming down going forward, because as supply chain actually gets resolved, that's a major problem solved for the world.
Do you think it's possible that the margins are increasing because of the sanctions of the European products, of Russian products? Do you think that is priced in the market?
I think that is definitely priced in the market. What is also priced in the market is the 2 million barrels cut that 2 million barrels cut that the OPEC Plus has done. We do have the meeting of JMCC coming on the 1st of Feb, but it's not an OPEC Plus meeting. We don't really expect a major move to happen. So it is definitely priced in, but at the same time, a slowdown in the economy, if it doesn't come, the prices seem pretty much fair at the current valuation, and it doesn't seem that we'll see much of movement in the coming weeks.
What about OPEC? Do you think that there are any changes in the first quarter in relation to OPEC policy?
Like I said, they're not really having a full-fledged OPEC Plus meeting. It doesn't look like the OPEC Plus countries are much bothered with the price coming at these levels. It does look like an equilibrium price. The profit margins, as you said, have gone up significantly. We don't expect much of a cut on the supply side. At the same time, there definitely is not going to be an increase on the supply side. So OPEC Plus will pretty much be monitoring how the world economy fares, and more importantly, that the China demand does come in or it does not come in. So they will actually pretty much keep policies unchanged for now.
Thank you very much, Vijay, for being with us today. It was a pleasure having you.
Thank you so much.